Good afternoon, everybody. Happy Halloween. It's October 31st, last day of October. Man, time's flying. Time is flying. Big day tomorrow. We got the jobs numbers. There's going to be a little bit of, wobbling in the data. It'll be interesting to see how let's see how the market reacts to it. What's the impact of the two hurricanes, of the Boeing strike? Who knows? No one knows when the numbers are going to come in, but regardless, it's a great time to buy a home. It's a good time to refinance. Now, if you follow me at all, you might notice that this is the second time I'm going live today. The first time I went live, apparently, I did it without sound. That's right, my new microphone that I'm trying to master I have not done it yet. So I did a brilliant 13 minutes in silence. And what's interesting about being in silence is I got more likes than I typically do. I got immediately like 4 likes. I don't know what that says. I don't know what that means. You like that you couldn't hear me? No, I'm not going to take that personally. It's curiosity. In the spirit of Halloween, I thought I'd give out some treats today, and treats in the form of identifying some opportunities that you may or may not be aware of. Now, one of them is straightforward, and the other one is a little bit more nuanced, but I want to talk about 2 different opportunities. I'm going to start with using an article from Torsten Slok. He's a chief economist at Apollo. He has a daily newsletter called The Daily Spark, and it's a great newsletter. It's free. I highly recommend you subscribe if you're all interested in staying on top of the market. I've used Torsten Slok's material repeatedly. He's probably been the most accurate economist, certainly on housing, on GDP, on labor. Any of the economists I've read, he's been spot on, and so I have a lot of respect for him. Today, I'm going to share some data he shared in his October 27th newsletter titled "A Lot of Money on the Sidelines Coming Out." And there's 2 different data points in this article. And by the way, I put a link to the article in my notes below. And I did a LinkedIn post this morning summarizing the article and providing the link. So if you can't get the link, doesn't work through the notes below, go to my LinkedIn page, read the summary, click through the link. But here's the 2 data points that he shared. The first data point is there's currently $6.5 trillion with a T, $6.5 trillion in cash parked in money market funds. Which makes sense, right? Money market funds are paying over 5% depending on what type of account and your relationship to the bank, 5.25. And so people put a ton of money into money markets because the yields were acceptable. And similarly, prior to the pandemic, about 700,000 people had an account with Treasury Direct. And in case you're unfamiliar with Treasury Direct, that's where you go to buy, you can go directly to buy treasuries from the treasurer. So you can buy, usually people go there to buy tips because that's the only place you can buy them, but you can buy any type of bond. You can buy a gazillion bonds. And so 700,000 people had an account with the Treasury Direct prior to the pandemic. At the peak of the height of interest rates, let's say at 5.25, that number swelled to 4 million people. Which that means is that 3.3 million people opened a Treasury Direct account because they were chasing the higher yields of treasuries with no risk, right? You can get 5.25, no risk, right? So 3.3 million people opened up a Treasury account and invested in the Treasury for a couple $1 trillion. So altogether, we have over $8 trillion in money markets or Treasury that went into those vehicles for safe yield, right? And as interest rates now are dropping, what do you think is happening? Those 2 investment vehicles are unwinding, or people are now exiting those vehicles because they're like, heck, they're perceiving that interest rates are going to continue to go down, and therefore that's not a good investment strategy for them. So that means $8 trillion needs to find a new home, right? $8 million needs to find a new, $8 trillion needs to find a new home. And my question or my thought is, how do we as real estate and mortgage professionals capitalize on that? How do we get in front of those asset holders and convince them that real estate is a really good option for them, that real estate is a safe option for them, right? How do we do that? I mean, it's far safer. What happens when, and this is intentional, of course, as interest rates drop, as the yield to an investor falls, those investors have to chase higher yields in higher risk securities, right? They go into the stock market and they try to go find where can they get, 8, 9, 10, 11% return, but that's riskier, right? And I think if we become wealth advisors through real estate, we need to educate some of these folks that a very safe investment is real estate. And the other advantage that real estate has over, say, treasuries or money market, where treasuries and money market is a dollar for dollar investment. And what that means is that if you put $100,000 in a money market and get a 5% annual return, at the end of the year you've earned $5,000, 5%. Conversely, though, real estate is a leveraged investment where you can acquire a $100,000 property by only putting $10,000 down, and if that property appreciates 5%, right, or $5,000, that $5,000 return on your $10,000 investment is a 50% ROI. Now there's some carrying costs and expenses, I get all that. This is simplified, but 50% return on investment seems far better than 5%, especially when real estate is probably a safer security than a stock. And if these people were obviously they're in money markets and treasuries, they want something safe, right? And they went to the money market and treasury when yields got higher. So they want as high as yield as possible with as little risk as possible, which in my mind makes them ripe candidates for real estate, for investing in real estate. And so we got to go out there and find those folks, and we got to convince them the strength and security of real estate, and we need to open a conversation with them. And it starts with talking to people in our database. It starts by talking to our SOI. Ask them how much money do they have in their money market? Are they invested in treasuries? What's their strategy? Are they going to go chase yield? If so, you might have a really safe solution for them. And it makes you their valued advisor when you can speak to them about this. And you're not selling them, you're just seeing how can you help them. Because these investments are unwinding, we might be able to prevent them from making a risky decision. And so that's my first treat for Halloween is let's connect with our customers. Let's keep an ear open to see who we bump into that might have some of this $8 trillion that needs to unwind, and can we help them find a new home for it? So I really like that. That's straightforward, really easy. Like I said, I put a link to the Daily Spark newsletter that covers this. It has a little chart. It's a pretty short, concise data point, easy to understand. This next little treat I'm going to give you is a little bit more nuanced. It's not less valuable, but a little bit more nuanced. And this comes from A Wealth of Common Sense, which is a newsletter by Ben Carlson. It's another daily newsletter, it's another free newsletter, and it's another exceptional newsletter. I quote Ben quite a bit. He has great data. A couple times a week he has tremendous amounts of charts. It's very easy to understand, super sharp guy. I really enjoy using his stuff. Now, really honestly, Torsten's my go-to guy, and Ben doesn't conflict with them, just has different angles on stuff. Both of them are great. So I'm gonna discuss Ben's newsletter from October 28th, just a couple days ago, and it's titled A $12 Trillion Opportunity for Financial Advisors. So we just talked about an $8 trillion opportunity. Now we're going to talk about a $12 trillion opportunity. Now you're going to have to stick with me because we're going to need to connect a few dots here to find the opportunity in it for us as mortgage or real estate professionals. But here's the basic thing. 10,000 baby boomers are going to retire each day until the end of this decade. Is that incredible? 10,000 baby boomers are going to retire every day until the end of the decade. That's a whole lot of baby boomers retiring. That's a whole lot of baby boomers that are going to retire. And these baby boomers, by the way, have $80 trillion in net worth. $80 trillion. That's what these baby boomers have, right? And so here's the thing, though. As these baby boomers retire, most of them are going to need or have the opportunity to convert their company-sponsored 401k plan to a rollover IRA. So much so, what Ben says, it comes to $12 trillion is going to roll over from 401ks to IRAs in the next 5 years? $12 trillion. And his argument in his newsletter is, look, financial advisors, these people, often many of them have well into the 7 figures in their 401ks. They shouldn't do it by themselves. They shouldn't do the rollover by themselves. They shouldn't figure out their allocation or their investment strategy. That really advisors who typically have not advised in IRAs, but they need to get in front of it. And the financial advisors need to get their products, their IRAs in front of these people, and that they need to help them, they need to advise them on the rollover and the allocation and the investments, right? And that what Ben encourages financial advisors to do is get a relationship with boomers now, so that you'll be the one to help them when it comes time. And when I read this and I thought about it, I go, well, that's really interesting. And I go, I can see that $12 trillion is going to roll over. I go, how can we as real estate or mortgage professionals, how can we not only benefit from this massive transfer of assets, but how can we could be a service to those boomers who are going to go through that transition? And it occurred to me that we have a couple of opportunities. The first is, once again, drilling down into our database and adding into our active listening and adding into our consultative practices the conversation around our clients that are coming of age of retiring. And so we need to start to make sure we're having a conversation with our clients. What's your retirement plans? When do you plan to retire? Are you set for retirement? Now, we should have already been having this as their wealth advisors, especially specialized in real estate. But we really need to know, hey, are you retiring soon? And when you retire, what are your plans? And do you have a 401k? And if you have a 401k, do you have a strategy of what you're going to do after you retire? Are you going to roll that over? And are you planning to do that yourself? Or do you need help with that? It's a valuable asset. I recommend you use a financial advisor. Do you have one you can use? Would you like me to refer you to one? Right? And so that's a valuable role we can play with the people in our database, the people in our sphere of influence, understanding their retirement plans, and then asking them if they need help, right? Recommending they use a professional and asking them if they need help. And when we do this, we position ourselves as the expert, we position ourselves as valuable, we position ourselves as being selfless and serving, and that increases our cachet. It improves our brand. It will come back in the form of business for us. Now, another way we can leverage this opportunity, as Ben covers in his newsletter, a lot of financial planner or advisors are not aware of this and do not have a strategy. They don't have an awareness or a strategy of how they can go win some of this $10 trillion opportunity. And so we have the opportunity to go educate our affinity partners in that financial advisor space about the opportunity. We also have the opportunity to partner with them in trying to capture it, right? And so I would recommend that, hey, we're doing lunch and learns and pop-bys and office visits and one-on-ones with our financial planners. We're using this as a prospecting opportunity. Hey, Mr. Financial Advisor, can we meet together to see, I want to learn your strategy about how you plan to help these 10,000 baby boomers retiring a day, how you're going to help serve them potentially transition their 401k into IRA. Have you thought about it? Have you built, have you built a vehicle for them? Do you have advisory for them? And then if so, are you interested in me potentially referring my clients to you so you can help them? And by the way, would you be interested in doing, wealth seminars, out to my clients and your clients so we can educate them on how to optimize this, right? So we're using this $12 trillion transfer of assets as a prospecting, vehicle to affinity partners. And then we're trying to see if we can together share databases, do, wealth seminars, and really solidify a reciprocal referral relationship anchored by us bringing valuable information and strategies to our affinity partners, and by creating opportunities for them within our own database and sphere of influence as they do for us. And in that conversation, of course, talk about the role that real estate plays in wealth creation. And so that's a $12 trillion opportunity. So my two treats for everyone on this Halloween, my $20 trillion in candy from my Halloween basket is money on the sidelines, money markets, Treasury Direct, and then money rolling over from 401ks to IRAs. How can we be a valuable resource? Because what we really need to do is we need to elevate our stature in the financial planning, wealth creation arena to where our clients see us as valuable and come to us for our advice and our connections first, and that we serve them selflessly and we bring value, and in turn, it builds a good practice for us. And so that's what I encourage everybody to do. See if either one of these strategies resonates with you. Take them to market. Check out these two newsletters. Hopefully, thank you for your patience. Hopefully we have sound this time. Hopefully everything worked. More than that, I hope you guys have a really good Halloween. Have a safe Halloween. I hope you had a terrific October. Tomorrow is going to be an interesting day. It's probably going to be probably going to have a little excitement in the morning. And then it's just back to work, nose to the grindstone. It's a great time to buy a house. It's a good time to reposition your equity. That's all I got. Happy Halloween. I look forward to seeing you again tomorrow. Thanks.